Parabolic SAR is a powerful technical analysis indicator developed by J. Wells Wilder Jr. in the late 1970s. SR stands for stop and reverse, indicating its primary function of determining when to exit and reverse a trading position. On a price chart, the parabolic SAR appears as a series of dots placed either above or below the price bars. During an uptrend, the SAR dots appear below the price, creating a parabolic curve-like pattern. When the price trend reverses, the SAR dots flip to the opposite side of the price. During a downtrend, the dots appear above the price, continuing their parabolic pattern. Parabolic SAR has several primary uses in trading. First and most notably, it's used to set trailing stop losses that adjust as the price moves favorably. Traders also use it to identify potential entry points when price crosses the SAR dots. It provides clear exit signals when price crosses the dots in the opposite direction. And it helps confirm changes in trend direction, especially when used with other indicators. Overall, parabolic SAR is a versatile indicator, particularly valuable for trend-following traders who need adaptive stop-loss levels. Let's explore how the parabolic SAR indicator actually works. The parabolic SAR uses dots positioned relative to price to indicate market trends and potential reversal points. Let's visualize how this works on a price chart. Here's a price chart with the parabolic SAR indicator. During an uptrend, the parabolic SAR dots appear below the price line. When the trend reverses, the SAR indicator flips to the opposite side of the price. When another reversal occurs, the SAR flips back below the price line, signaling a new uptrend. Notice how the dots create a parabolic shape, getting closer to the price as the trend accelerates. This is where the indicator gets its name. To summarize how parabolic SAR works, when dots are below the price, we have a bullish trend suggesting long positions. When dots are above the price, we have a bearish trend suggesting short positions. The indicator flips when a trend reversal is detected, and the dots accelerate toward the price as the trend continues, which creates the parabolic shape that gives this indicator its name. The parabolic SAR indicator is calculated using a precise mathematical formula. The main formula is current SAR equals prior SAR plus the acceleration factor times the difference between the extreme point and prior SAR. Let's break down each component of the formula to understand how it works. SAR stands for stop and reverse. This is the actual indicator value that gets plotted on your chart as dots. The acceleration factor, or AF, starts at 0.02. It increases by 0.02 each time a new extreme price is recorded, up to a maximum value of 0.20. The extreme point, or EP, is the highest high during an uptrend or the lowest low during a downtrend that's recorded while the current trend is active. The formula is calculated differently depending on whether the market is in an uptrend or downtrend. In an uptrend, the SAR is calculated using the formula, with the extreme point being the highest high recorded in the current uptrend. Similarly, in a downtrend, the same formula is used, but the extreme point is the lowest low recorded in the current downtrend. There are important constraints that prevent the SAR from being calculated incorrectly. In an uptrend, the SAR value cannot be placed above the current or previous low price. In a downtrend, it cannot be placed below the current or previous high price. If these constraints are violated, the SAR uses the most recent extreme point instead. When a trend change occurs, the SAR jumps to the prior extreme point. Importantly, after a trend change, the acceleration factor resets to 0.02 and begins incrementing again. Let's visualize how the parabolic SAR appears on a price chart. The white line represents price movement, while the blue dots show the parabolic SAR values. Notice how the SAR dots trail behind the price, accelerating as the trend continues. Let's go through a sample calculation to see how the formula works in practice. In this example, we have a prior SAR value of 5.6, an acceleration factor of 0.14 after 7 new extreme points, and an extreme point of 8.0, which is the highest high in our uptrend. Plugging these values into our formula, current SR equals 5.6 plus 0.14 times the difference between 8.0 and 5.6. Working through the calculation step by step, 5.6 plus 0.14 times 2.4. This gives us 5.6 plus 0.336. The resulting SAR value is 5.936, which will be plotted on our chart. This calculation process repeats with each new price bar, with the acceleration factor potentially increasing if new extreme points are recorded. Now, let's see how to set up the Parabolic SAR indicator on your trading charts. Adding Parabolic SAR to your trading platform is straightforward. First, access your platform's indicator menu. Follow these steps. Open your trading platform, locate the indicators menu, search for Parabolic SAR, and add it to your chart. Let's understand the key parameters that control how Parabolic SAR behaves. The first parameter is the step, also called acceleration factor, with a default value of 0.02. This controls how sensitive the indicator is to price changes. The second parameter is the maximum step, with a default value of 0.2. This limits how quickly the SAR can accelerate, preventing it from moving too rapidly. Let's visualize how Parabolic SAR appears on a price chart with these default parameters. The Parabolic SAR appears as dots above or below the price. When the dots are below the price, it indicates an uptrend. When they're above, it signals a downtrend. Parabolic SAR works best on certain timeframes. Let's examine which ones provide the most reliable signals. Daily charts offer high reliability and are excellent for trend-following strategies. Hourly charts provide medium reliability and can be useful for swing trading. Minute charts generate low reliability signals and are generally not recommended. Be cautious when using Parabolic SAR on lower timeframes, as they tend to produce more false signals and whipsaws. With the proper setup and understanding of parameters, you're now ready to use Parabolic SAR effectively on your charts. Parabolic SAR provides clear trading signals based on the position of the dots relative to price. Let's examine the two main signals: buy signals and sell signals. A buy signal occurs when the SAR dots flip from above the price to below it, indicating a potential uptrend. Conversely, a sell signal is generated when the SAR dots flip from below the price to above it, suggesting a potential downtrend. It's important to understand that Parabolic SAR works best in trending markets. It can generate false signals in sideways or ranging markets, leading to potential losses. And it's generally less effective in choppy or highly volatile market conditions. Traders use these Parabolic SAR signals in several practical ways. They can be used to enter new trading positions when a clear signal occurs. They also provide clear exit points for existing positions, helping manage risk. For best results, traders often confirm Parabolic SAR signals with other technical indicators before making trading decisions. One of the most powerful uses of Parabolic SAR is as a trailing stop-loss mechanism. The SAR dots automatically adjust their position as the price moves, providing traders with a dynamic stop level that adapts to market conditions. Let's examine how this works in both uptrend and downtrend scenarios. In an uptrend, as prices move higher, the Parabolic SAR dots position themselves below the price. These dots act as a trailing stop that rises with the trend, helping to protect your profits while giving the trend room to develop. Conversely, in a downtrend, the SAR dots appear above the price and follow it lower. The critical moment comes when price touches or crosses a SAR dot. This signals it's time to exit your position and potentially reverse direction. Using Parabolic SAR as a trailing stop offers several advantages. It automatically adjusts to market volatility, helps prevent emotional exit decisions, and preserves more profit during strong trend movements. Parabolic SAR works best when combined with other technical indicators to confirm signals and reduce false positives. Trend-confirming indicators such as moving averages can help validate the signals from Parabolic SAR. When SAR dots are below the price and the price is above the moving average, we have a stronger confirmation of an uptrend. This combination creates a strong buy signal, filtering out potential false signals that SAR might give on its own. Oscillator indicators like RSI or stochastic can complement Parabolic SAR by confirming overbought or oversold conditions at potential reversal points. When the RSI shows overbought conditions above 70 and the SAR dots move from below to above the price, this creates a stronger sell signal. Similarly, when RSI moves into oversold territory below 30, as the SAR reverses from above to below the price, it provides a stronger buy signal. Using multiple timeframes can also enhance the effectiveness of parabolic SAR. For example, confirming a daily SAR signal with the weekly trend direction. When both daily and weekly SAR signals align, it creates a much stronger trading signal with higher probability of success. To summarize, the most effective way to use parabolic SAR is to combine it with trend indicators, oscillators, and multiple timeframe analysis to filter out false signals and improve trading results. Clear, unambiguous trading signals. Highly effective in trending markets. Functions as dynamic stop loss. Easy to interpret visually. Frequent false signals in ranging markets. Always generates signals even with no clear trend. Lag in responding to sudden price reversals. Not ideal in highly volatile market conditions. In strong trending markets, parabolic SAR provides effective signals and acts as a reliable trailing stop. However, in ranging or choppy markets, parabolic SAR generates frequent false signals, potentially leading to multiple losing trades. Use in conjunction with trend confirmation indicators. Avoiding in consolidated or ranging markets. Adjust acceleration factor based on volatility. Remember, no indicator is perfect on its own. Remember, parabolic SAR should be one tool in a broader trading strategy, not relied upon exclusively. Let's examine 3 real-world examples of using the parabolic SAR indicator across different markets. In our first example with Apple stock, we see an uptrend followed by a reversal. The parabolic SAR dots appear below price during the uptrend, providing support. We enter the trade when price continues to make higher highs and the SAR confirms the uptrend. Our initial stop is placed at the SAR level. As price continues to rise, the SAR dots follow beneath, acting as a trailing stop that moves up with the trend. When price action reverses and breaks below the SAR, we exit the trade as the indicator signals a potential trend change. Our second example shows a EUR/USD Forex trade. Here we see a false breakout that results in a losing trade. Initially, the EUR/USD pair is in an uptrend with the SAR dots below price. We enter when price makes a new high. However, the trend quickly reverses and price breaks below the SAR, triggering our stop loss. This demonstrates how the SAR can help limit losses in false breakouts. Our final example shows Bitcoin in a strong uptrend. This illustrates how the parabolic SAR can be effective in capturing significant moves in trending markets. We enter early in the established uptrend, with the SAR dots providing a trailing stop below price. As the price trends strongly upward, the SAR follows, locking in profits while allowing the trend to continue. Eventually, a reversal occurs and the price crosses below the SAR, signaling our exit point. The trade captures a significant portion of the uptrend. A key element of successful trading is proper position sizing. Using the parabolic SAR helps determine your risk per trade. For each market, we calculate position size by dividing our risk amount by the distance to the SAR. For example, with a 2% risk on a $10,000 account, we risk $200 per trade. From these real-world examples, we can draw several key takeaways about trading with the parabolic SAR. The parabolic SAR provides objective entry and exit signals and works as an effective trailing stop. It performs best in trending markets, while position sizing based on SAR distance helps manage risk. Remember that every trading system will have both winning and losing trades. We'll now explore advanced parabolic SAR strategies for experienced traders. A key advanced strategy is customizing parabolic SAR parameters for different market conditions. The 2 key parameters to adjust are the step value and the maximum step value. Default parameters use a step value of 0.02 and maximum step of 0.2. These work well in normal market conditions. For more volatile markets, traders increase these values to 0.04 and 0.4, creating a more sensitive indicator that follows price more closely. Let's explore more advanced approaches using multiple SAR settings simultaneously. A powerful advanced strategy is using multiple SAR settings simultaneously. Traders often use a conservative setting with a step of 0.01 to identify the overall trend. Simultaneously, they employ an aggressive setting with a step of 0.05 for more responsive trade signals. The combined strategy is to enter trades only when both settings agree on the trend direction, but exit when the aggressive setting signals a reversal. Another effective approach is applying parabolic SAR across multiple timeframes. Multiple timeframe analysis enhances parabolic SAR effectiveness by providing both strategic and tactical perspectives. Traders use higher timeframes like daily charts to establish the primary trend direction. Lower timeframes such as hourly charts are then used for more precise entry and exit timing. The strategy is to only take trades that align with the higher timeframe trend direction, using the lower timeframe for precise timing. Some traders prefer to use parabolic SAR solely for trend confirmation rather than exact entry and exit signals. Rather than using SR for exact entry and exit points, advanced traders often use it purely for trend confirmation. In this approach, when the SAR dots are below the price, it confirms an uptrend. When the SAR dots flip above the price, it confirms a downtrend. This approach works by using SAR only for trend direction, combining it with other indicators for precise entries, and helps reduce false signals in choppy markets. Before implementing these advanced strategies, consider these important recommendations. Before implementing these advanced parabolic SAR strategies in live trading, consider these important recommendations. First, practice extensively in a demo environment to understand how these strategies perform without risking real capital. Second, test different parameter settings on historical data to find what works best for your trading style and preferred markets. Third, start with a single advanced strategy before combining multiple approaches to avoid overwhelming complexity. Fourth, keep a detailed trading journal to track your results and make data-driven adjustments to your strategies. Finally, always consider market context and volatility when selecting and applying parabolic SAR strategies. Remember that parabolic SAR is a powerful tool when used with proper understanding and appropriate customization for your trading conditions. By mastering these advanced strategies, you can significantly enhance the effectiveness of parabolic SAR in your trading system.